is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, welcome back to another episode of DeFi Decoded. I'm Alex Tapscott, here with Andrew Young. Andrew, a lot of people in crypto are really hopeful that Donald Trump would be good for their portfolios, but so far the opposite has been true. Unless you held Bitcoin, you've been actually flat or down since he was elected in November. I think Solana is maybe the only one in the top 20 that has kind of held its ground. All of the other ones seem to be doing terribly. And now I think people are starting to realize that a Trump administration is one that's fraught with a lot of uncertainty and a lot of risk. And we saw that with all this trade war, the trade war tantrum that we experienced on Sunday in currency markets and Monday and equity markets. And frankly, there still seems to be a bit of a hangover today across the board, across stock markets, Europe, Asia, reeling a little bit here. There's a lot of uncertainty in the US. And of course, crypto is kind of down bad. So what's going on here? Talk to us about the macro. Are we going to recover from this, or is this more what we should be expecting going forward?
Yeah, so the Trump trade war in the short term is highly inflationary, though as most economists have pointed out, it's kind of a one-time spike in inflation. If Trump actually had gone through with his 25% tariffs on Canada, Mexico, and I guess 10% on China. So obviously, like, inflationary spike, that means interest rates are going to presumably come back up. And then, risk assets, which crypto is obviously a big part of that, would get crushed in that scenario. What's interesting, though, in the short term is the prospect of tariffs is actually sending the US dollar up as well, which is also negative for sort of global liquidity. And the reason why that's happening is because central banks around the world are sort of cutting in anticipation of economic impacts to their own countries. I mean, Canada is a good example. We just cut almost entirely because of, well, not entirely, but a big reason why we recently cut the central bank was we're worried about the, deflationary impact of tariffs. And so obviously if central banks around the world are cutting rates, notwithstanding Japan, which actually seems to continually increase them, that crushes the local currency relative to the US dollar. And so the US dollar has been way outperforming, which is kind of interesting also because it kind of mitigates the inflationary impacts of tariffs as well, right? And if the US dollar is rising, then that kind of lessens the blow to US consumers. I think someone was saying about it's like something typically typically mitigates about 50% of the impact of tariffs is sort of US dollar strength. So yeah, I mean, I think the biggest thing though is just kind of uncertainty, especially when the tariffs are being announced and then being reversed less than 24 hours later. Markets don't like that. So.
Yeah, I mean, I don't know. It seems like markets were pricing in all the good stuff, potential good stuff about a Trump administration, tax cuts, deregulation, potential for increased growth, and so forth, without pricing in any of the downside, which is that trade wars are inflationary, U.S. dollar strength is bad for risk assets, and just generally the mayhem and uncertainty of a Trump presidency causes a lot of investors to be quite wary, right, of how to allocate their capital. And I think that that's something that can weigh on risk assets and weigh on markets. So I don't know if we're going to get clarity on any of these issues. I think that disorder is going to be the norm going forward.
Yeah, one thing that has been really surprising, because most people are very bearish on Doge, for example, like bearish on the ability of Elon Musk's Department of Government Efficiency to actually get anything done. The thing is they're really just taking a wrecking ball to different aspects. I mean, I think there's like reports that they've effectively just gutted the entire U.S. aid agency, which is like a $44 billion line item effectively on the U.S. Fed, U.S. in terms of like its annual spend, and notwithstanding the like political impacts of doing that, I mean, there's obviously huge negatives with kind of just straight gutting the entire agency. It does, in my head, sort of raise the prospect that the incredibly bullish and like incredibly optimistic goal that sort of Elon put out of cutting $1 trillion from government spend is not, it's potentially somewhat possible, or at least they might be able to take down hundreds of billions of dollars. They'll probably cause a lot of damage in the process, but that is also that's actually like very deflationary because you're cutting tons of spending, which makes the U.S. Debt position a little bit more sustainable, and that sort of brings down yields, particularly on the long end. So, it's kind of a mixed bag right now on what's going on with sort of like the macro impact of Trump. Like trade wars are definitely bearish for risk assets, particularly crypto, and then some of the stuff in terms of trying to cut spending, and then obviously like the regulatory stuff is very bullish. So I don't know if you want to talk a little bit about the sort of like the regulatory side. David Sachs, who's the AI and crypto czar for Trump, he had a press conference yesterday at 2:30 p.m. sort of going over essentially where they are in terms of crypto regulation. I don't know if you had a chance to catch some of the highlights.
I did, yeah. I mean, just going back to Doge, I would say that before Doge was created, and when it was created, people were skeptical whether or not anybody could make any kind of meaningful changes to the bureaucracy. I would say that's no longer the chief concern. I think a lot of people are worried that there's an individual beyond anyone's control and unaccountable to anyone who's gutting the government, and could maybe shake things up or maybe cause harm that will be hard to reverse, right? I mean, you can lose weight by cutting off your leg. That's an easy way to drop a quarter of your weight, but it also impacts your ability to do a lot of things. So I wonder about some of this cutting, whether or not it's designed to make the government leaner and more efficient, or whether or not it could do harm.
It's probably a bit of both. Sorry to cut you off, but like if you look at Argentina, Argentina I think has been the best performing stock market over the last 12 months, and kind of counter to what everyone expected, Milei was actually able to just gut tons of spending. And what was really interesting is that his popularity has actually increased. And they're now, I think they just had their first budget surplus in a long, long time. So, and then, that rapidly drives down the cost of capital for the Argentinian government, which kind of feeds on itself, right? Because interest payments are such a large percentage of the U.S. outlays now. So if you can...
That part is true, but I think that's where a lot of similarities between those two countries end. There's a big difference between the U.S. government and the Argentinian government.
Couple
I would argue, in terms of the services that they provide and the role they play in the world. I think it's a little bit different. With a country that's got a GDP, the GDP of Argentina is like the GDP of Toronto, right? It really is. It's like $350 billion a year. So it's not like super comparable. But anyway, we shouldn't get into, this is not a politics podcast. Though in this current moment, as two Canadians as well, who, stared down this tariff threat over the weekend, I think attitudes have become more political and people have become a little bit more heightened as a result of all this. But yes, let's move back to the crypto regulations in Washington. So, I mean, the David Sachs speech was a bit of a nothing burger, honestly. I mean, speech, I don't know if you'd even call it that. I think he spoke for a few minutes about crypto, which is part of his dual mandate of crypto and AI. And he did, I think, once again, reiterate that the administration is considering or studying or determining the feasibility of a strategic Bitcoin reserve. So for the Bitcoin bulls, that didn't give them a lot of comfort. I think someone did a word count and saw that the words crypto, digital asset, blockchain were all mentioned, but the word Bitcoin was conspicuously absent until he was asked a question from someone in the audience, and that's when he actually provided his insight. But there's lots of other real, more substantive things that are going on. We've seen the House and Senate Republicans pushing forward new bills, one based on an old bill called Fit 21, which was a financial innovation for the 21st century. And that really focuses on market structure, updating rules to account for tokens and blockchain. And then also a stablecoin bill, which I think is just a refresh of a prior bill that was put in front of Congress, brought by a couple of lawmakers, but never really made it past the early stages. We're not political experts about the U.S., but both of those things are being given another kind of kick at the can. And the chairman of the Senate Banking Committee actually said that they're going to try and move quickly on these bills, that they could potentially be up for a vote within the first 100 days. So I think we're seeing some interesting progress there. There is also bipartisan support, I will note, on some of this stuff. We used to say that crypto was a bipartisan issue. It's obviously become more politically charged, but there's definitely a lot of support for getting clarity on a lot of these issues on both sides of the aisle. And then I would say probably the most interesting thing that I saw this week was that one of the commissioners of the SEC, Hester Pierce, has been given the nod to lead a task force within the agency to basically overhaul their approach to crypto. And you may recall that Hester Pierce has been known affectionately as Crypto Mom for her early advocacy on behalf of the industry back in its infancy, when a lot of people weren't really paying attention. I guess as Crypto Mom, she was providing a little bit of adult supervision. There's Crypto Mom and Crypto Dad, which of course is Chris Giancarlo, friend of the pod, who's been on before, and was the past chairman of the Commodity Futures Trading Commission, the CFTC. So in her letter, basically announcing her leadership of this new task force, Ms. Pierce basically kind of made her case for what the industry, what the SEC needs to do right in order to help promote innovation while maintaining their mandate. So, the SEC has like other regulators and central banks and these organizations, they have sort of mandates, right? The mandates are typically, at least for the SEC's, I think it's investor protection, to maintain efficient and orderly markets. And there's one other thing here as well, which is to facilitate capital formation. Duh, of course. So, the creation of new businesses, IPOs, and so forth. All of those things are, I think, compatible with crypto. And she makes the point that we invite builders, enthusiasts, and skeptics to engage with us to figure out what the final rules should be and what interim steps might help to foster innovation in the meantime. But she balances that with the assurance that the U.S. capital markets will not be a haven for fraudsters. So she's basically saying, we want innovation, but this isn't going to be a free-for-all. There's lots of rules in place that prevent wrongdoing already. And that's something that they're going to keep an eye on. But I want to point out just one passage from her letter, which I thought was really interesting, which she says, spinning up coins and tokens is easy. If people want to buy a token or product that lacks a clear long-term value proposition, they should feel free to, but should not be surprised if someday the price drops. Adding, in this country, people generally have a right to make decisions for themselves, not look to mama government to tell them what to do or not to do, nor to bail them out when they do something that turns out badly. So it's a pretty interesting tightrope to walk, in my opinion, right? You're basically saying we want to protect investors while also empowering them to make decisions, sometimes the wrong ones, about investments, not to endorse any specific product, but to endorse innovation as a general rule, and to help with the sort of advance the mandate of capital formation and orderly markets with something that potentially disrupts the markets. So all of these things are kind of happening at once. And I think it's going to be a pretty big challenge, actually, to kind of figure out how to make that work. I don't think everyone's going to be happy. I think probably as a regulatory agency, they're going to come down more on the side of disclosure and investor protection rather than like the free for all. And honestly, that's probably the best way to do it. But it's going to be a wholesale change from the way things used to work. I think the question is how they thread that needle and whether or not they're able to get it right, whatever right means in this context. But I think that there is a path forward that helps to sort of bring all those things together. So to me, that was like that. There's a lot of yapping going on about crypto, but this is someone who has been thinking deeply about this subject for a decade in her role as a commissioner at the big regulator, and has written speeches and lots of articles that I've read and shared with people, where she's really provided this very thoughtful, lucid argument for why we should care about this stuff. And so to see her in this role, I think is very promising.
Yeah, I think I totally agree. I think also I saw something that the SEC is dropping redirecting their entire crypto enforcement staff to other areas, and sort of providing quote unquote retroactive relief to past sort of crypto enforcements, notwithstanding any fraud cases. I think, to be honest with you, it's definitely very positive. And the funny thing is like 12 months ago, if that had happened, crypto would be ripping right now.
Yeah.
I think most of that stuff's priced in now, to be honest with you, in terms of like the regulatory side. I think everyone kind of just accepts that, there's going to be soft touch regulation, kind of let them play ball with like some thoughtful hopefully some sort of thoughtful disclosure regime, which I think is what crypto needs. And I think for the most part though, like that's, just talking purely from a market's perspective, none of that's too surprising. I think right now, obviously the only thing that crypto market really cares about is the SBR. We just like, people want to find out if the federal government's going to start buying Bitcoin. I think most people kind of expect, at least under Trump, that the U.S. government won't sell its current Bitcoin stockpile, which I don't have on me, but it's like hundreds of thousands of Bitcoins. And so now the question is, will they actually, use capital to actually buy Bitcoin on the open market? I don't even know how that would work. I guess they would just do it OTC with Coinbase or something like that, or maybe an auction. But yeah, I think like that's pretty much where we are in terms of, it's almost like we've notched so many wins on the regulatory side that like the only thing that's really going to move the market is really the Bitcoin reserve. And so I think one thing that Sachs sort of said yesterday that was interesting is I believe he said Bitcoin reserve specifically instead of crypto asset, because there was kind of a big backlash a couple weeks ago that like it wouldn't be a Bitcoin reserve, it'd be a crypto reserve, which could theoretically mean Solana, Ethereum, Ripple is being bought by the U.S. government, which I don't think anyone really thinks is smart. Maybe not smart, but just seems wrong. Anyways, we'll find out. I think that probably will come down the pipeline at some point. But I would be shocked if the U.S. government is buying Bitcoin in the next 12 months. I mean, I just think that would be too crazy, but we shall see.
Yeah, not selling it, I can see that. I mean, they're sitting on a bunch of Bitcoin that they've seized, and choosing to not dump it. It's sort of the low hanging fruit here. Buying it and parking it in reserve, I think, is unlikely. I think that, like, if you listen to Jerome Powell, the Federal Reserve Chairman, he's like, there's zero reason for the central bank to own Bitcoin. But I think that the thinking is not that this will be on the Fed's balance sheet. It's that this will be a strategic reserve of the country, more akin to like the strategic reserve of like oil, right? And that was the argument that Chris Giancarlo made on a recent webinar that we hosted, where he's like, the U.S. government stockpiles all sorts of stuff. It stockpiles grain, it stockpiles oil, it stockpiles, plant and equipment, whatever that it needs. Like that this is more akin to like a commodity being stockpiled than it is to like a monetary instrument that would be used by like a central bank. And so I think that's where people are thinking. Again, I never say never. Like, I think anything is possible in this admin, but I'm with you. I'm still kind of skeptical. So we've got
sorry, real quick. One last thing is that the U.S. government owns 207,000 Bitcoin, which is roughly 1% of the total supply. Cynthia Loomis, who's the Wyoming senator, who's probably the most pro crypto senator or even politician in the U.S. She put forward a plan for the U.S. government to own 1 million Bitcoin, so 5% of the total supply, or just under 5%. So that would be, essentially arguing for buying 800,000 Bitcoin, which would be insane in terms of the price impact.
Yeah,
it also just it would kind of mean potential arms race across the world for people buying Bitcoin. But we shall see. I think the U.S. also announced the sovereign wealth fund, so it definitely seems like they're sort of moving in that direction. I don't know if it really makes sense though when you're in a huge deficit, because you're just printing money essentially to do that. But we shall see.
None of this really makes sense. Usually it's oil-rich nations that create a surplus that they want to then invest and diversify themselves away from oil, right? Like the Gulf states,
it's like Norway
or something. Not a country that runs a $3 to $4 trillion deficit every year, taking borrowed money it doesn't have to what? To do what? Invest in what? Like, I don't understand. What would they own? What would the sovereign wealth fund invest in?
Well, you're printing money.
Real estate?
You're printing. Yeah, you're printing money and buying assets, which I guess, the Fed does that too. So
I know.
I don't know.
Does the Fed have a $4 trillion, until recently, a $4 trillion sovereign wealth fund made up of long dated corporate debt and mortgage-backed securities and stuff like that?
It's UBI for asset managers. But I'm here for it. Anyway, so let's talking about printing money.
Good segue.
Jake, your analyst, your esteemed analyst, shared before the show that effectively Ethereum has reversed all of the burn that it had. So essentially, for a while, Ethereum has been burning its transaction fees. I think it's a portion of its transaction fees from in terms of its revenue, and it actually gone deflationary for a while. So the amount of new ETH that was being created and distributed to stakers was actually less than the amount that was being burned. And so essentially the net supply of Ethereum was actually going down. Yeah. Up until the Dencun upgrade, which essentially, as we've talked a lot on the show, crushed the sort of transaction fee revenue that Ethereum got from L2s. And since then, Ethereum's been actually inflationary. And we recently passed a milestone where the amount of ETH that has been issued since that upgrade has now surpassed the amount that was ever burned. And so, essentially Ethereum's fully inflationary again from inception, or at least since the upgrade. So curious what you think about that. To me, I guess I'll just give my opinion real quick.
Yeah, go for it.
Before I pass it off. To me, I think it was a reasonable trade, because by crushing your revenue model, which Ethereum effectively did, you were able to spawn a much more robust L2 ecosystem. There's hundreds of L2s now. And what's interesting is there's actually I think over 20 L2s now generating significant revenue. And by significant revenue, I mean over $100,000 a month, which is really great. So
that's a lot
to me. It was
$1,000 a month.
Well, at least they can cover their costs. They can cover their infrastructure costs. Because launching an L2 typically it's about $30,000 a month just in sort of upkeep, notwithstanding salaries and everything like that. But and the growth rate is also crazy. So TVL users all up and to the right for L2s across the board.
Well, given all this positivity, ETH must be at an all-time high. Let me check. Oh wait,
nope. Unfortunately,
it's not. It is.
Yes.
I think it may be lower than the start of last year and lower than it was prior to the election. And I'd love to know where it is relative to when the merge happened. It's probably up a little bit since then. So, I mean, my point of view on that is I don't really know what's good or what's bad. Like Solana is very inflationary at the moment, and it is performing a lot better. Now, increasingly, a lot of the staking yields that Solana produces are not driven from inflation alone, they're driven from fee revenue. And that percentage has been increasing. So there's a really bullish case to be made for Solana and some of these other like layer ones where most of the economic value accrues to the stakers of the actual platform. I guess what worries me about Ethereum too a little bit is that um, as successful, as important as it is, it's like the linchpin of this entire, L2 ecosystem. It's not participating economically as much as I think it should. I guess like if everyone's drafting off of this layer that is essential for all of them to run, why is it that they are receiving a tiny minuscule fraction of the sort of fee revenue that comes off of those platforms? I don't have the data in front of me, but I saw like Base, it's like retaining 80% of the revenue from network activity, and that's going to Coinbase, the company. So maybe that's a great part of the bull case for Coinbase, which is something we've talked about. But what does that mean for the base layer Ethereum? And can Ethereum change to capture more of that? To me, that's more important than inflationary, deflationary, because actually during that whole period when ETH was deflationary, everyone was pushing this argument that it was ultrasound money, which I think was, if not harmful, a total distraction from what Ethereum is. Because like, what were they trying to do? Compete with Bitcoin for the meme of digital gold? Like, you're never going to unseat Bitcoin. And so I just wonder whether or not that was like a useful way to position it. It makes sense in a world where, the platform's generating lots of revenue. Some of that is excess earnings, and some of those excess earnings go towards buying and retiring tokens, similar to like how a company would take excess earnings to buy and to retire stock, right, in the form of a share buyback. And that can be the sign of the health of a business. But in this context, we've got this situation where the platform itself is not growing revenue in a way that you want to see, right? So I'm at a loss when it comes to ETH at the moment. And I'm trying to do some research we're trying to do some research to just sort of figure out what the path is. Like, I'm still bullish on this platform. I mean, it's the chain that launched 1,000 apps and helped to kickstart the Web3 era. And it still secures more than half of all the TVL. And in spite of that upgrade, the blobs upgrade, I think the revenue has been increasing. Even though it's receiving a smaller amount. So like, there's all this positive stuff, but like, it needs to figure out what it wants to be, I think, when it grows up, or what this next phase looks like.
Yeah, I think the biggest, it is truly the most cursed coin in the crypto market. It actually started to finally outperform on Saturday, right before.
Someone sent me a note. They're like, first day ever, it's outperformed. I'm like, and it's like,
that's bad.
It had one
Bad
day.
sign.
It's like, congratulations, one day.
It was also, I remember someone saying like, the market's weak when Ethereum's leading, and lo and behold, next day we had like a 25%. It was pretty funny actually to watch. Yeah, it's interesting. I mean, I think the bear case for Ethereum is that it's going to be like, kind of the new Cosmos, as in like great.
That hits me in two ways. I don't like it. Okay.
I think it's I'm sorry, but it's like new Cosmos in the sense that everyone kind of recognizes that Cosmos has the best tech, but it doesn't have great value capture mechanism, and therefore like the token has been sort of hit pretty hard. Yeah. I think it's a little bit different though, because Cosmos is shifting towards shared security, which is sort of more akin to how L2s work with Ethereum, and will actually drive value to Atom. But then also too is, it's just different scale. Obviously, like Ethereum has tons of different L2s. It has its own ecosystem as well. So I don't necessarily agree with that framing. I think the bigger thing really is just that we're in a full kind of fast money mode for crypto, which is kind of depressing to be in if you're trying to build like real business and real value in the crypto space, just because things like Enron coin are launching and just at like a $250 million market cap, whereas like things with real tech are kind of getting hammered. So and not even real tech, also just like real businesses. So yeah, I mean, I don't know. To me, it's weird. Like it still feels early in the crypto bull market, just because only Bitcoin and Solana and meme coins, and really Solana is just kind of a proxy for meme coins, have been doing well, which is like a very sort of weird market. It's kind of similar to, I guess, the 2021 market, where NFTs were really hot and like a lot of the other stuff hadn't been doing that well. So we still haven't really seen that shift. The biggest question in the market right now is whether we'll actually ever see a shift. I think most people are still pretty bullish on crypto, at least over the next 12 months, maybe not 18 months plus, but we'll say next 6 to 12 months. There's some people calling the top, but I don't know. It's for the most part, people are kind of bullish. The question really is whether we'll ever get a shift from this like fast money mode of just like people chasing crazy meme coins, to people actually like allocating to like real crypto businesses. TBD. But yeah, I mean, we'll see. It's been a kind of a weird market so far, I would say. And if we do get a shift to on-chain businesses, then Ethereum sort of poised to outperform, just given its dominant position in TVL stablecoins. The fact that there's like so many different L2s that have their own business model built on Ethereum, and then there's also tons of like DeFi apps and things like that have also been doing pretty well. So I don't know, curious to see, but so it's definitely an interesting market right now.
Yeah, interesting. That's one way of putting it. Confusing is another, or at least unclear. But sorry, as you can tell, I'm in a bit of a mood today. You know what? We'll see. I think a lot of people in the market have kind of lost perspective on just how much things have shifted. To have, the biggest country in the world have a government that is actively pursuing policies that should make the industry more, or should help the industry, I think is kind of a big deal, right? And I think so long as the industry can't shoot itself in the foot with all this nonsense, I think that we could be in for a very bright 2025 and beyond. But I think it remains to be seen. So
I think before you conclude, I think the biggest thing is that there's so many. Most of the people who operate in crypto are sort of under allocated to Bitcoin relative to, like, if you think of Bitcoin's market cap as, it's like 60% of the total market cap. For the most part, I don't think most people have their crypto portfolio 60% Bitcoin. So in an era when Bitcoin is just outperforming, most people are actually underperforming the sort of broader crypto asset class. So we'll see. So
maybe they'll all just capitulate and like rage buy Bitcoin, and maybe that will send Bitcoin to like $500,000, because everyone's underweight. Though I think most people in crypto are not like benchmarked. It's not like, oh God, the benchmark is 50% Bitcoin and I've been at 20% and I'm underweight and I've got to like chase that in order to like, save my job. Like that's how like equity investors might think, but not how a crypto market participant would think, because they're not benchmarked typically. That would require them to be an institutional fund manager, and there aren't a lot of those. There are lots of hedge funds out there with maybe absolute return benchmarks, but I don't think like that the idea of like a Bitcoin weighted index benchmark is all that common. I might be wrong about that. If any listeners know otherwise, let us know. So it may just be that people wait until the capital cycles down. That's what's happened historically, of course, is that you get this wealth effect in Bitcoin and everyone says, okay, what's next? They go down to, the next thing they think is attractive, and then it goes down and down and down and down and down. And then there's, token diffusion, and that's typically when the cycle ends. And we've kind of haven't even begun that experience yet, with the exception of a couple isolated examples. So it's a very interesting time. Okay, I think that's a good place to end it, Andrew, unless do you have anything else you want to add to that?
Oh, that is the question.
That is therein lies the question. Okay, that's it for this week's episode of DeFi Decoded. Thanks everyone for joining us. Make sure to like and share and comment on the podcast wherever you're listening to it. Helps us with our search rankings, helps others find the podcast, and we appreciate the feedback. So let us know how we're doing. Until next time, take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.